So very range-bound trading session continues on D Street. At least that's what our experts also highlighted at the start of the trading session, and that's exactly what we see. Because for now, Nifty is trading absolutely flat, while Nifty Bank, yes, of course, at one point in time, did slip below that 55,600 mark as well, but it's now seeing a decent recovery. Nothing much that we are seeing on this index as well. But indeed, the auto counters are once again doing well, because just yesterday we did tell you that there are reports highlighting that the rare earth issue or the shortage situation is seen to be improving, or rather is expected to improve in quite some time now. And because of that, maybe that optimism building in the stock prices as well. Some of these auto counters are doing well, and especially Eicher Motors. We did speak with the management today, of course, with Eicher Motors VECV, where they are bullish on the commercial vehicle demand picking up in the second half. Other than that, it's Tata Consumers that is definitely one of the top gainers on the Nifty 50 side. Select IT counters, select metal counters, they are boding well. On the flip side, a couple of these Adani group of counters are under pressure. Bajaj Finance is also down 2%. Other than that, some of these counters within the banking pact, and especially IndusInd Bank, after almost a 5% jump yesterday, is down almost 1.5%. But Aisha, a lot of stock specific action indeed. But yes, on the expiry day today, the range bound trading session continues.
Yeah, absolutely. The range trade continues. Siemens Energy, though, that's had a decent D Street debut. It listed on the bourses today. Remember, it's the demerged entity from Siemens, although it's now cooled off, down about 5% or so. Loris Lab, Gilead Sciences, has got an HIV drug nod. US FDA has okayed the twice already HIV prevention drug. So that's one stock which is in focus as well. Zydus Life, FDA inspection closed with 2 observations at their Ahmedabad plant, although they're not critical in nature. So that's exactly what we're picking up in terms of news flow right now in trade. But yes, continues to be ranged. Tata Consumer, M&M, Eicher, Wipro and Biocon seem to be your spots of green. Kunal, hi afternoon. What are you making of trade?
Yeah, I think except for the indices still stuck into a range, the action today was more on the mid caps and small caps on the downside. In fact, there was a point where I think the mid caps was down 1.5%, and the small cap index was also on a very similar kind of a trend trajectory. So I think this is more of stock specific selling which is happening on the markets, where the large caps and the indices are still stuck into a trading range. To really call the direction of the market now becomes every more difficult, because we are looking at a point where the market breadth start to deteriorate, but the indices are still stuck into this exact midpoint of this 500-600 point band. So we'll have to wait out for a point where the index actually comes closer to maybe either a resistance or a breakout or breakdown test. That's where we will probably anticipate that which side the markets would head towards. As of now, the view for the index still remains the same, that we are into this tight ranged consolidation, and that may continue for some more time.
All right, tight range of consolidation that may continue for some more time. And yes, what we are seeing is that the breadth of the market is seen to be deteriorating. The mid-cap and small-cap index, no substantial recovery on both these indices from the day's lowest point. But the auto pack is doing indeed very well, because not just some of these two-wheeler counters which are seeing marginal gains, case in point being Hero MotoCorp, Bajaj Auto, they are holding up well. But now Eicher Motors, M&M, these counters are also participating in the rally. Kunal, we understand that you did highlight Maruti Suzuki at the start of the trading session, but what about the rest, and especially what's your take on Eicher Motors?
Yeah, I think it's a good bounce we are seeing for Eicher Motors. There is a slight follow-through up move for stocks like Bajaj Auto. Escorts also, I think, at one point of time just about came into the greenish territory, but then the stock is just about trading flat. So and same is the case with Maruti, where the stock has shown good price action, at least a follow-through up move from yesterday's close around 12,700 mark. So this indicates that we are now looking at a point where there is a very strong probability that the auto stocks in the auto index would start to rally and would start to show signs of a very strong price uptrends. What matters, I think, is maybe that these stocks or these sectors, they don't see any major negative news flow in the next couple of days. I think even if we happen to see that kind of a scenario, there could be a chance that we may see a follow-through up move. So Eicher Motors, Maruti, even Bajaj Auto to a certain extent starts to look very bullish.
Okay, those are some active auto movers. In fact, since we're talking about the sector, let's also hear it out from Vinod Agarwal from Volvo Eicher, talking about as to how the rate cut cycle and early monsoon should aid growth for the overall auto industry.
Cut in the interest rates, monsoon positive, and high replacement demand, infrastructure investments, good economic growth. These are all very, very positive factors which point towards good commercial vehicle industry in the current year. Schools are continuing to do very well. Even in first 2 months also, the demand from schools for buses is growing. And this is, of course, a school season also till the month of July. And of course, the demand from the staffing segment as well as for intercity coaches. So therefore, the entire bus segment is doing very well, and we are likely to get good tenders on the electric vehicles. Already one tender of a very large number of buses, around 10,900. That's on the card. We are expecting that to open very soon. And after that, of course, financial year 26, we should see another tender also coming up. So therefore, electric buses, we should see good traction. Heavy duty trucks have been sort of flat in first 2 months. So therefore, we are expecting more demand coming from construction trucks after the monsoon period. So therefore, I expect maybe the growth could be between 5 to 10%.
All right, so 5 to 10% is the industry growth that Eicher Motors management expects versus the analyst estimate, which ranges between 1 to 5%. So indeed a bullish commentary coming in over there. But moving on, let's talk about some of those recent IPOs, because in the past 6 months, 20 of the 29 IPOs have delivered negative returns, with MobiKwik plunging over 60% from its highs. Many issues were richly priced, driven more by hype than fundamentals. Now all eyes are on the bigger IPOs expected in the second half of 2025. Sharad takes us through the trends that he's picking up. Sharad?
The last 6 months has been very dismal for the primary markets, and out of the 29 IPOs we are tracking, 20 of them have been negative since their listing numbers. Now, MobiKwik sees the maximum loss beat the highest loss from the IPO price or the lifetime high prices. And interestingly, some concerns have also come, especially with the unlisted deals happening at elevated prices. And of course, the valuation correction happens, and post-listing, if the lock-in happens, the shares start breaking down. Highly priced IPOs, that's also something a matter of concern. And interestingly, over the last 6 to 8 months, the narratives have topped the fundamentals. Also, the market conditions, of course, you could say there's a lot of volatility in global cues, but nevertheless, the IPO market has not been that strength. Also, let's look at the last 6 months return. Now, how we have based it is the returns coming in since listing and the returns falling from the high. And of course, the losers are more here. One, MobiKwik, you see a large numbers coming in. Stallion India, Dam Capital, that's a surprise name. That's almost down 44% from its highs. Concord Enviro, Carraro India, 30 to 30 odd % in both the segments. Also, Indo-Farm Equipment, Mamta Machinery and International Gemological Institute. These names have also given more misses in the last 6 months, and a significant wealth erosion has come for the investors who have invested in this company. The list for gainers is few, but there are only just 9 names. Skoda Tubes tops the chart, 43 odd %. Quadrant Future, Quality Power ranging between 25 to 28% gains to return, and muted warm kind of returns coming for Hexavetech, AG Swopac, which was recently listed, Ajax Engineering, and even Bellrise Industries. So there has been more misses than hits over the last 6 odd months. And 3 important things, takeaways, what's next going ahead. One should exercise cautious, especially in the unlisted space. The valuations are very high, and what would be the IPO price? That will be a cause of concern. Larger IPOs are slated to come in the second half of this calendar year, LG Electronics and also NSE, NSDL. So of course, liquidity will be something to watch out for, and be very, very, very careful in SME IPOs as well.
All right, thank you so much, Sharad, for highlighting all those details of how the past 6 months have been for the IPO market, as well as which are some of the upcoming IPOs we just got to know. But time now to slip into a very short break. Don't go anywhere. We'll be right back with more on the other side.
back with closing trades right here on ET Now, and still pretty lackluster in the market. Though what should be a little bit concerning today is the way the broader markets are coming off. The story is not in the Nifty. It's not been for almost a month now. It's really what's happening within the broader end of the market, because that's where you're seeing quite a deep gash. It's a good 192 count actually, standing to the declines within the F&O universe in NSE, versus just 33 odd names standing to the greens right now as we speak. And all sectors are pretty much in the red. Adani Transmission, Varun Beverages, Science, Supreme Industries, JSW Energy, and these are some of the more liquid names that I'm highlighting. The list, of course, is pretty endless over there. But ET Now's journey over the past 16 years, just like India's markets today, has been nothing short of spectacular. The Nifty, in fact, in the last 16 years has zoomed 478%. That's from June 2009 to June 2025. Financials now dominate the index with a 34% weightage, which is up from just 11 to 12% back then. And IT has doubled its share while oil and gas has lost steam. Sharad takes a look at how the past decade and a half has gone by for the markets.
Well, the journey has been very strong with ET now turning 16. Now, of course, the Nifty return over the last 16 years, that is 478%. Now, let's look at how the composition of Nifty has changed from 2009 and current levels. You see, 11 to 12% was the weightage for financials. That has almost tripled to 34 odd percent. Oil and gas, the weightage has come down. For IT, also the weightage has actually gone up. And interestingly, for auto and consumption, it still remains the same. So this is how the Nifty is evolving. Also, interestingly, if you look at the overall stocks in the Nifty which have actually survived these 16 years, these are the big names which we talk about daily. HDFC Bank, ICICI Bank, Infosys, HCL Tech. From FMCG space, we have HUL, and also the auto names, Maruti Suzuki, M&M, and even Hero Moto making it to the list. So these are the important companies which have actually stood the test of the time, and they have been in the Nifty index. Now, let's look at the Hall of Fame. What are the returns have been there sector-wise? What overall segments have done well? Auto, 1000% more. Same thing goes for IT and even Midcap. Interestingly, FMCG Pharma also giving multifold returns towards north of almost 700% plus, while Nifty Bank, that number is also coming in at 69%. Nifty Small Cap, Nifty 50 Index we spoke about, that is also ranging between 400 to 600 odd percent, but towards the lower side, but still at the positive is the Nifty Energy, the Metal, the PSU Bank, and the Realty Pack as well. Also, let's look at the stocks, which are the top multi-baggers in this 16-year journey of the markets. Bajaj Finance, number one, 618 times. Ajanta Pharma, 365 times. Astral, Uno Minda, these stocks have given multifold returns to the investors. Coming to the list, we are also having Eicher Motors, and interestingly, SRF, Navin Fluorine from the chemical space also make it to the list. Smaller names, Aegis Logistics comes up with 128 times growth, followed by TVS Motor, Minda Corp. And interestingly, Trent has picked up, and of course, the recent rally, of course, we've seen last 3 to 4 years also contributed to the Trent's growth as well. And small names, Chola International, LT Foods also make it to the list. And lastly, Deepak Nitrite also makes it to the Hall of Fame. The rise of retail investors, that has been the strength of India, and also growing with ET now. Now the demat account, that was only 1.7 crore in 2009. 16 years forward, it's 20 crore. And that is the power of the retail. The mutual fund equity AUM, that itself has actually gone up significantly higher. And of course, we have taken the equity segment. 1.42 lakh crore was there in 2009. And now the schemes, the mutual fund houses, all have participated, and you see the number coming in at 32 lakh crore rupees. So the journey has been very strong for the last 16 years, and the journey is expected to remain more strong for the next 16 years.
All right, thank you so much, Sharad, for getting us all those details. Indeed, in the past 16 years, how the journey for the Indian stock markets have panned out and which have been the key outperformers. But with this, let me also welcome Akshay Bhagwat on the show right now. Hi, Akshay. Good afternoon. Good to be speaking with you. Firstly, since there's no significant action on the benchmark indices, help us understand that which sectors you believe are now trying to make a comeback or are looking interesting at this point in time?
Good afternoon. It's the weekly expiry, and unfortunately, the indices are stuck around 24,800. It's the mid and the small cap sector where the action is, because clearly there is a lot of selling intent as we look at the screen, and most of the sectors are stocks are bleeding over 2 to 3%. There is a broader market sell-off, and really sector specific. If you were to choose which sector would kind of hold on to the kind of the sell-off which we are noting in the last 3-4 days, I think somewhere IT sector has some strength, although it is down today. But I believe stocks like a TCS and HCL Tech or a Tech Mahindra, TCS, these are the big boys in the IT space. And eventually the thought is, looking at the broader technical setup, they may eventually find demand at the lower end of the support band where they trade. So I would be betting on IT names as a safe haven to park on the buy side in this current volatile or directionless conditions the way the markets have been.
Okay, that's the take coming in on the markets. But Kunal, what you flagged off earlier, the weakness in the broader market today is a little bit alarming. The Nifty is doing nothing, but that's not the case with the broader end of the market.
Yes, Aisha, I think that's the concern for the markets today, because there's one way to look at that maybe the indices are just about trading into a range. So this pain or this sell-off across the broader market, that could be absorbed pretty much very quickly whenever the markets show signs of recovery, because that's where the money would start to flow in. But the other way to look out for is that consistent weakness across the market breadth eventually causes the indices to also reverse its course of trend. So that, I think, is something to watch out for. It's just, I think, the first major day where we are seeing weakness across the mid caps and small caps over the last many weeks. We have seen the indices, mid cap 50 as well as the small cap indices breaking below their 3-day, 4-day swing lows. So that's the first point of concern which is emerging across the sectors. But then when I look at the components or the composition of the sectors, the mid caps and small caps, there are multiple stocks which have actually come into single digit RSIs on their hourly charts. That generally is an indicator that we may not see a very major kind of follow through move on the downside for many of the mid caps and small caps, which have already been falling over the last couple of days. So which all of that sum totals that we are looking at a potential that over the next couple of days the mid caps and small caps could bounce back, and the indices as usual could trade into a range.
Kunal, is there any theme within the broader end of the market which could actually lead, or for that matter, even with the large caps? Or do you think it's going to be more broad-based whenever the recovery happens?
So it starts off with, what happens, Aisha, is that whenever the markets go into a consolidation, it becomes more broad-based. Whenever the markets go into a direction, it's always been led by few sectors. Now, in the last, for example, 3-4 weeks, you had few odd days where the banking did well, financials did well, then you had realty which did well for a couple of days, and now you're looking at, there was a phase where IT stocks also did pretty well a couple of days back, and then now you're looking at auto stocks starting to show signs of a breakout. Now, in a zone of consolidation, there is no major trending moves which we see into the index. I'll go back to the last 2-3 months, when the move started off for the indices sub 22,000 mark. That was a point where the defense stocks, for example, the PSU theme, they started to outshine, outclass most of the other sectors. So that's the difference which is happening this time around. You're not seeing any major uptrend into sectors, individual sectors, and that's the major reasons why the indices are still trading into a range. As of now, there are still no major signs which are emerging that there are few sectors which are oversold, some of them are overbought. They're still at a neutral territory for many of the sectors, and that's why it becomes very difficult to call in that which are the sectors would actually go into the first leg of a revival whenever the markets have to go into a breakout mode.
All right, but a lot of stock-specific action indeed. And Kunal, I just wanted to have your take on one of the stocks I believe you track closely, that is restaurant brand Asia. I'm not sure about the news flow, but this particular counter is seeing a surge of almost 9 to 10% in today's trading session. Give us some sense that how is the setup looking like, and is this move also supported by volumes?
Yeah, it's one of the best volumes the stock has seen over the last, I think, 1 year. Almost 2.5 crores, 2.35 crores volume on the NSE segment for restaurants brands Asia. The stock is nearing, or I think intraday there was a breach of 200-day moving average for the stock price, but it's corrected or ebbed off slightly from those intraday highs. That's maybe because of the overall market condition. But these are the kind of stocks which generally see some strong price volume uptick and then a follow through price up move. They are the stocks which generally see a follow through uptrend going forward over the next couple of days. So as I'm anticipating over the next 2 days, you might probably expect many of the mid caps and small caps to show a strong bounce back. I think in that light, we may expect stocks like RBA to also go into a further rally mode.
All right, that's about restaurant brand Asia. But within the consumption basket, Akshay, one stock that is showing a good uptick today, that is Tata Consumers. Just yesterday, the company did highlight how their FY25 performance has been, but nothing significant came out of that. And today, we are seeing the stock having an up move of almost 2%. What do you make of this particular move, and should one really trust this move and maybe take a position here?
Well, the initial sense looking at the price volume action is this is more of just a trading up move. The longer term or the medium term charts are still, showing more of a neutral setup with the stock broadly trading in a falling channel, 1200 being the upper end band and somewhere 900 being the support zone. So the bounce which we have seen in today's trading session comes at some vital moving averages, short term ones which are placed around 1060 zone, and the belief is that this carryover move can last till around 1100 to 1125 at the best. So it's more of a trading move, not to be taken and held from a medium term perspective as the current trading goes.
Okay, that's the take coming in on Tata Consumer right now. That's, of course, one of the big winners today. Auto as a trend, M&M, iShares, those are two names which are also holding out very well. But we chatted with Hiren Vaid from Alchemy Capital Management earlier today, and here are some of the sectors that he's liking. He's talking about as to how the cap goods theme, some of the defense names, chemicals and pharma are spaces that can still, yield good returns from even the current levels.
I still feel that, while valuations are expensive, but there is a structural growth in those, right? So whether it is asset managers, wealth managers, exchanges, I still feel that there is money to be made there. So to answer your question, would you still deploy fresh money? The answer is yes, okay. I would.
All right, but Mr. Vaid, let's also touch upon some of the sectors within the broader markets where companies have already delivered well and they're still looking forward to great growth numbers. One of the case I believe is EMS counters, where Indian companies rather have showed what they can do and what they are capable of course with the government support. And the other one is the quick commerce place, where we have seen a bit of a turnaround as well in select companies. Do you believe it's still reasonable at these price points where the valuations are already stretched, but still it is the case where you can pay more?
So I think I agree with you. I think EMS is a great growth opportunity still. I think we are in the early stages of a growth cycle, right? Probably with the exception of Dixon, which is just about going to reach 1 lakh crore of market cap, right? A sector which is so large and the opportunity which is so big. I think you will see the birth of many large companies there, right? And yes, the valuations are quite punchy, but you will have to therefore elongate your time horizon for investing. Having said that, I think we have to be careful because a lot of the growth is in the price and valuations, right? So unless you are really willing to bet for the next 3 to 5 years and wait for that growth to unfold, there could be intermittent quarters where the numbers may or may not pan out to be good, and you could have a very significant drawdown in these kind of names. But on a structural basis, I still believe there is money to be made. It's a young sector in India relatively.
What about e-commerce place?
On quick commerce, I think it's, we are at an interesting juncture where, you have 2 or 3 people jostling for the market, right? I think the players themselves are surprised at the kind of growth that we've seen in the quick commerce segment. I think that for some more time, the competitive intensity is going to be much higher. So again, while companies will achieve scale quickly, but whether they can achieve profitability quickly is yet to be seen. It's a large opportunity, and my sense is that in this, it will be the winner takes it all. So whoever is number one will probably get the disproportionate part of the valuations, and for the rest of the players, I think while they can be happy saying we do quick commerce, but there'll be no quick money to be made there.
Kind of reminds me of telecom, that the one with deep pockets, the one with the spending power is going to win the game.
Correct.
Yeah, absolutely. And just so much competition now, because everyone's realized that the pie can be shared.
Yes.
And, everyone from a Rapido to Amazon, and you keep hearing new names on a daily basis. So I don't think that, the prime position that Eternal had again, and I think the stock price is pretty much reflecting that.
Yeah.
It's
I
going to
think
be a while before it gets
people are
back,
waiting and watching to
yeah.
see who's going to come out trumps in this game.
Yeah.
And I guess you'll have to wait for a couple of quarters to get that answer, right? Because everybody is fighting for that pie. So in the near term, it's anybody's guess.
Yeah.
Let everybody burn their money and then we will
and
see
then we'll
what happens.
who's left. Yeah. But I want to get back to the sector that you were talking about earlier, pharma.
Yeah.
There is that big overhang on, Trump's tariffs there as well.
Yeah.
But, and of course, they keep propping up all those US FDA issues as well.
Yeah.
But where is it that you see opportunity within pharma? Stick to generics, go for the new fads, biologics, GLP-1, etc.?
So I think, broadly, again, pharma is very different. You have to be stock specific. But I'll tell you very interestingly, I was in the US, one of the sell side firms, they do a conference every year. And I thought, let's go and, get some perspective.
Welcome back to Closing Trades right here on ET Now. Nothing much happening when it comes to the index levels, but yes, a lot of stock-specific action. The pharma counters, select pharma counters are doing well, but what is not doing well is Laurus Lab, because this counter is in focus as one of the MNCs, Gilead, has actually gone ahead and got an approval actually from US FDA for an HIV drug, which is one of its kind. In just 2 injections you take on a yearly basis, and that's expected to be a competition for Laurus Lab, because Laurus Lab gets almost 46% of its contribution only from the ARV segment, wherein US, of course, is one of the key contributors, and also some of these EMEA geographies as well. But for today, we are seeing a bit of a correction in Laurus Lab. So let me help with a chart check on this one. And Kunal, if you can just have a look at Laurus Lab, the stock has been correcting with a 2.5% of decline. Where do you see the stock headed?
Yeah, I think after this kind of a move and over the last 3-4 days, I was looking at the charts for Laurus Lab, and the stock was nearing a breakout above 660, 670 kind of a zone. There was slight jump in the option activity, slight bit of encouragement in terms of the volumes, both on the futures as well as on the cash side. But then this sudden reversal indicates that the stock is not yet ready for a breakout or a sustaining of the breakout of the about the 670 plus mark. And now with the stock crossing below the 650 levels, I would actually believe that the stock could now go into a retest of its previous key moving averages. The first level of support now for Laurus Labs is closer to 620 mark, 620, 624 kind of a zone. So I'm expecting another 3 to 4% correction over the next 3 to 4 trading sessions for the stock.
Okay, that's the take coming in the markets. Before I take it across to Mayuresh Joshi, there's a big move now, it seems, coming in the insurance sector. ET now has learned that insurers may soon be allowed to offer value-added services as the government has finalized the Draft Insurance Act Amendment Bill. This marks a significant shift from the current regime where insurers can only sell pure insurance products. Anurag Shah joins in for more on the same.
Proposed Insurance Act Amendment Bill in upcoming monsoon session, and as per our sources, the final draft of bill to allow value-added services to insurers. So a clause to be introduced which will allow value-added services incidental to insurance business, and the list of value-added services will be finalized by insurance regulator IRDA, and time to time that list can be changed also subject to condition and situation. So that clause to be introduced in Insurance Act Amendment Bill. This will allow insurance companies to offer value-added services related to the insurance business like gym membership, health checkups, etc. Because presently insurers are not allowed to sell other products, only pure insurance products only insurance companies can sell. But after the value-added services, the overall traction of insurance company and the policy holder will increase due to the value-added services, and this will help in increasing insurance penetration also. That was a demand of insurance companies, and as per our sources in the final Insurance Act Amendment Bill, this clause to be introduced which will allow value-added services incidental to the insurance business, and the services list of services will be decided by insurance regulator IRDA, and that list can be changed time to time subject to conditions and situations.
Okay, let me take it across to Mayuresh Joshi as well. Mayuresh, hi, afternoon. What is it that you're making of this very range trade that we've been stuck in for a while now? But at the same time, you know, it's the broader markets once again wherein you are seeing movement. And today, unfortunately, it's quite down. Where do you think the large caps are going to find the next set of triggers from?
Afternoon, Aisha. I think clearly the markets are reacting in terms of the geopolitics that is happening specifically in the Middle East. But there is some hope and resemblance that if there is any news that comes through in terms of de-escalation over the next few days, I think the range-bound mood that we're probably seeing in the market, because the market has gestated the worst in terms of the first 6 or 7 days of the Iran-Israel conflict that we've probably seen. And therefore, I think over the next few days, if we hear something on de-escalation, something which probably is assuming that the worst in terms of the conflict might be behind us, I think we'll definitely come out of the range-bound trade that we are in. Obviously, I think within large caps, the construct still remains positive in terms of select leadership BFSI stocks, because the space generally looks geared up in terms of better earnings growth. Obviously, OMCs, the oil and gas space becomes more of a tactical trade as we speak. But generally, I think for large caps, the mood has been pretty sanguine so far. I think it's the mid caps where I think the entire action might be over the next few quarters as earnings start coming back. So I think mid caps and selective leadership stocks within that universe might actually fare well, where earnings are expected to hold up, at least in a domestic context, for the next few quarters.
So that's the take on the markets, but a very interesting news flow on the bottom of your screen. Have a look at that. It's HDB Financial IPO, one of the subsidiaries related to HDFC Bank, and that IPO will open on June 25 and closes on June 27. That's as per the agencies what we are picking up. Indeed, we'll get more details on this particular front, but HDFC Bank will be the key to watch out for. We are waiting more details on this as well. But let's also get you some of the stock ideas as well from both of our experts. And Akshay, you go first. Tell us which is the stock that is making up to your list.
From the buy side, Escorts is the stock which has a good short-term technical setup. So if you look at the stock, 3260 is where it trades. It has shown a strong recovery backed by good volumes from the support zone of 3100. And this bounce back is promising enough to see targets of 3372 on a short-term perspective. As a risk management, you can work with a stop loss of 3197 on this buying position.
Right, okay, that's the take coming in on some of those individual stock ideas. Kunal, would you have anything to recommend?
Yeah, large cap names, and interestingly, Axis Bank is back again to the breakout mode, just about that 1200 plus mark. So would look out for higher targets closer to 1250 for Axis Bank, stop loss at 1205. And M&M is the stock which is heading towards a breakout about 3100 levels. So if the stock closes about 3100 marks over the next couple of days, that could be a very interesting breakout trade for M&M. 3200 could be a target post that, stop loss at 3050.
All Right, so those are the two buy calls coming in from Kunal, as well as Akshay also gave us his take. But Mayuresh, give us some sense that within this lot of sector churning that is underway, which sector do you believe is poised for a good recovery? We just concluded the earnings season as well. So any sector do you believe that you will be watching out closely, maybe for the next couple of quarters, wherein earnings and valuation support can take the stock prices higher as well?
No, afternoon, Shrishti. I think healthcare as a space is something where our belief is selectively stocks can do well. Within healthcare, hospitals as a space has delivered a very decent set of numbers as far as Q4 is concerned. And therefore, our take is the asset-light model that a lot of hospital stocks are embarking upon over the last few quarters has started yielding results, both in terms of the average revenue per operating bed as occupancy rates are inching higher. We're also probably seeing the average length of stay coming down as hospitals mature. And therefore, I think hospitals within healthcare as a space is where I think the earning stability might actually continue. And a lot of hospitals are showing that earning strength, specifically in their price strength as well, as we see it in markets within India. So I think the ratings, rankings, institution holding, all the elements that we follow in CanSlim are getting exhibited by this space itself. Certain hospitals like KIMS, as an example, Fortis Healthcare, Narayan Rudralaya, are stocks where earning stability might actually continue over the next few quarters. The other space, obviously, I think within BFSI, you've obviously seen some strength that happened for the NBFC stocks. Our own sense is that select NBFC stocks might still continue doing well, in our opinion. And therefore, in a falling interest rate scenario with RBI front-loading 50 bips of rate cuts, the expectations in terms of stronger franchisees with a better diversified borrowing mix, expectations in terms of a better advance mix as well, better capital adequacy, and therefore, I think a better take in terms of the overall balance sheet growth, leading to better ROEs and ROEs. I think they can continue doing well. So stocks like Shriram Finance, as an example, is something that we continue holding in our domestic and global portfolios. And last but not the least, I think a few of the consumption-driven stocks. Our own sense is that with better monsoons, rural, semi-urban consumption, which has started coming back, should come back even strongly in the second half. And therefore, I think a few of these apparel makers, Vishal Mega Mart, which just concluded a big block deal, V-Mart Retail, the SSG growth has been pretty decent for these companies. It's a good mix for apparel, FMCG, non-FMCG. The price points are appropriately placed. And in tier 2, tier 3 cities, where the expectation is that if growth rebounds very, very strongly in terms of discretionary spending, I think these guys actually might be guys who can benefit quite significantly on all parameters that we're probably put through. And therefore, rating rankings look superb. So I think Vishal Mega Mart, V-Mart might be a couple of ideas on the semi-urban stroke rural discretionary spend, which can actually exhibit better volume and price moves as far as balance sheets are concerned.
Right, okay. While India's leading cement companies, that's Ambuja Cement and ACC, have achieved a landmark sustainability milestone, the two companies have now reached net zero targets validated by the Science Based Targets Initiative. Remember, SBTi's corporate net zero standard is the world's only framework for corporate net zero target setting in. Okay, so that's that on, what we're picking up on ACC as well as Ambuja. And that, of course, is the commentary coming in from Vinod Baheti from the Adani Group. But just quickly, taking a look at what the market is up to. And we're trying to get a smidge up, at least on the Nifty right now. We're about 3 points higher on the futures. So trying to cover ground. But again, it's been just such a narrow band that you've had today from the word go, really. This jagged edges really mean nothing because it's been a very narrow move from the high to the low of the day. It's JSW Energy, Supreme Industries, Adani Transmission. These are some of the names where you have seen a fair amount of weakness trickle in for the equity markets. And if I just look at some of the names which are pretty active, look at a KPIT Tech. This has been a very steady performer. Today, the stock is down about 2% or so. It's seen an OI build-up of almost about 25 odd percent. Vedanta, SBI Cards, Adani, Green, Bosch. These are some of the very, very active movers in trade. But Mayuresh, as a theme in the market right now, what do you think will continue to remain laggard? And does IT come to the top of your mind?
I think within IT, again, I think large cap ITs might lag a tad bit compared to the mid cap space, because I think the commentaries for select mid cap companies, Ayesha, have definitely been better and encouraging in terms of order wins, pricing, utilization levels, etc. So I think the lag effect or the deferment in terms of orders, in terms of what probably goes through in terms of discretionary spending, as far as multi-million, billion-dollar orders are concerned, I think that might just drag earnings a tad bit in our opinion. So I think large cap IT might lag compared to mid cap IT. And our own sense is that metals generally as a space might actually lag a tad bit as well. The expectations in terms of global growth at this point of time still look circumspect. China still looks circumspect in terms of a recovery as far as the real estate market is concerned. And therefore, I think subdued LME prices along with subdued demand, I think that combination might not give the operating leverage that a lot of metal companies are probably looking at. Let's not also forget, I think there are a lot of initiatives that are being put through as far as the European Union is concerned in terms of production of green steel. And therefore, a lot of modifications are happening as we speak towards the ferrous element of the metals universe. So I think metals as a space might lag as far as performance is concerned, and might just underperform the broader markets over the next couple of months.
All right, those are the sectors that one can definitely look at this point in time. But with this, we are counting down to the market close then. But before that, let me thank Akshay, Kunal, as well as Mayuresh for taking the time out and speaking with us this afternoon. So just a few minutes left before we shut shop. So the markets are getting and witnessing some bit deeper cuts into the benchmark indices, especially because Nifty 50 is now down about 50 odd points, and at the closing Nifty Bank is now down more than 300 points as we speak right now. Auto as a pack has done well for the second straight day, wherein stocks like Eicher Motors, M&M, Bajaj Auto, Hero MotoCorp, they were shining bright and leading the gainers list when it comes to Nifty 50. But on the flip side, it's select Adani group of counters that were languishing in trade, followed by a bit of a reversal coming in on IndusInd Bank, Coal India, Nestle, Bajaj Finance, as well as Shriram Finance were some of the losers on the Nifty 50 side. While in terms of the breadth of the market, there we have seen sharp fall coming in on the benchmark indices at least, because look at the move in Nifty Midcap as well as Nifty Small Cap Index. They are actually closing down with almost 2% of the cut at the close. So indeed, and it's more than 2% cut coming in on the small cap index. So there was most of the pain in today's trading session is what we have witnessed. But in terms of the stock movers, yes, Autopack did well. Select pharma counters like Apollo Hospitals, Biocon, these were some of the other movers. And along with that, Wipro was one of the stock within the IT pack that did pretty well in today's trading session. On the flip side, it was Vedanta, which did come out with its annual report as well, but no key takeaway from there because the stock did end with a cut of almost 4% right now. Hindustan Copper, once again, 4% cut coming in after a 6% fall just yesterday. Varun Beverages, JSW Energy were some of the other laggards within the F&O basket. So all in all, a range-bound trading session, what we can call it. The bias was the bias was towards the negative side as well, while Nifty 50, Nifty Bank, they are ending the day in the red, and not just that, very select counters and select sectors were actually bucking up the trend. Tomorrow is going to be a very interesting day because ET Now will be celebrating its 16 years of completion. So that's the celebration that we will be having in tomorrow's trading session. But for now, it's a wrap and it's a goodbye from me and the entire team who put this show together. Thanks so much for tuning in.